Happy Monday once again, everyone. Bryan Devore, Devore Realty Group, Berkshire Hathaway Home Services, California Properties, your first Monday market moment of November. And we're going to find out why this could be the buyer's window of opportunity. That's from Stephen Thomas's most recent reports on housing. We'll get into that in just a moment. First, let's look at what we have right now. Active listings, 5,684, another big drop of 159 from last week. Median list price is $900,000. Average days on market is 59. Pending sales 2335, slight increase of 15 from last week with the median list price of $875,000. And average days on market is 40. Our months of inventory 3.03, down a little bit from 3.07 versus last week. Here's a chart showing total actives and total pendings. You can see since 9/15 or so almost 2 months ago, inventory has been steadily declining, which is normal for this time of year, but pendings have been staying strong. Abnormal for this time of year. Similar to what it was last year, but abnormal versus the rest of history, basically. Let's take a look and find out why in just a moment. Right now, or rather 676 homes came on the market last week. It's an increase of 14 versus last week. Median list price, $899,000. New pendings, 327, slight dip of 8 versus last week. Median list price, $899, $999. Average days on market, 38. New pendings listed within the last week, 13, and new pendings listed within the last 2 weeks, 90. So 4% of homes are still selling in a week, 27% are selling in 2 weeks. That's a little bit higher than it was last week. We had 336 closed sales last week, drop of 62, big drop, which is why months of inventory went down just a little bit. Kind of a hefty drop in the number of closed sales. Median list price 849.9 and the median sales price 836. Both are lower than they were the week before. Average days on market 36. Least expensive sale, it was a tie. There was two properties. One sold in Escondido, one sold in Boulevard, both for $150,000. The most expensive sale was in Rancho Santa Fe, $15,750,000. Here's a chart showing new actives, new pendings, and new closed sales. So a little bit of an increase in the number of new actives, not exactly expected, but it is what it is. Pendings down a little bit, but the big drop in the number of closed sales versus the week prior. Here's a chart showing median list price, median sales price, both numbers the lowest they've been in a while. Now, again, median list price is just, half the homes sold for above that and half below that. So it just depends on the mix of properties. We'll see if this is a trend next week or if it's an anomaly. Okay, from Stephen Thomas's most recent reports on housing just a few days ago, this chart shows total active inventory. You can see the trend line just keep going down, which is about the same as most every year, other than 2023, when active stayed about the same for the next couple of months. But yeah, inventory is going down, still higher than we've had in several years, but still lower than it was before COVID. Demand, which is the number of homes that go into escrow in the last 30 days, I'm staying flat. And right now, so we've been kind of watching it cross the lines from the previous years. Right now, we're about where we were last year, but last year we saw the big drop in the demand because rates went up. Rates are not going up, they're going down. We're going to touch on that in just a moment. So my gut tells me that in a week from now, we will have more demand than we have had in any year this time of year since COVID. All right, expected market time. You can see the market time continues to go down versus other years where expected market time was going up. So it'll be interesting to see if those lines cross towards the end of the year. Okay, here is the balance of what is on the market versus what people want. And you can see that the biggest discrepancy is in that 750,000 to a million category. 29% of the demand is in that category, but only 22% of homes that are available are in that category, hence the 64 days of expected market time last year and 72 days this year. Okay, why is it potentially the buyer's window of opportunity? As we talked about, rates have been staying low, and that's why we're seeing the demand is going up a little bit. And inventory continues to be bled out. This is why, as rates come down, buyers are out there looking right now, and now might be a good window before the market heats up and there's more competition next year. But between now and the end of the year might be the window. This is the interest rates impact on affordability. If you have a desired $5,000 a month payment, if you were at 7%, which is kind of what it was last year this time of year, you'd be looking at a $940,000 home. But now you can be looking at $1 million, $1,015,000 home. It's a big difference. So you have a lot more buying power now than you did a year ago. That's mortgage payment is principal and interest only, and a 20% down payment. Looking at it a little differently, take a look at the rates across the top, and you can see mortgage payment on $1.4 million home with a $1.2 million loan. At 7% interest rate, the payment is $74.51. At a 6.25 rate, which is where we're hovering around now at $68.96. So you can see the big difference. You're saving $6,660. So the same home, if you had bought it last year versus this year, it's saving you a ton of money. Big drop. And you can see as rates go down, it's even a bigger saving. So now could be the big window as rates are staying low. They expect to stay lower, but we're probably going to see more buyers coming into the buyer pool next year. Now is the time to get on there while inventory is where it is. That's it for this week's Monday Market Moment. Hope you have a great day and a great week. If you're a buyer, maybe it's time to go out there and go shopping. If you're a seller, be aware of your pricing to be sure you get your home sold in the amount of time you want to get it sold. Hope you have a great day and a great week. I look forward to seeing you next Monday.